Ivory Coast, the world's largest cocoa producer, is scaling back export contracts to 1.2 million tons after unusually harsh weather damaged crops. The cut, which comes amid volatile global cocoa prices, has raised questions about the country's long-term production capacity, farmer livelihoods, and the ripple effects across the global chocolate supply chain. Joining me for more of this, I have Agyei, analyst, SBM Intelligence. Thank you so much, Isaac, for joining me today.
Hi, thank you for having me.
All right, good to have you. Now, talk to us. How big a drop is this compared to Ivory Coast's usual export volumes? And do you think this signals a deeper production crisis?
Well, I think we've been at this point before. If you recall, the last two seasons, both Ivory Coast and Ghana have been struggling with their production numbers. And remember last season or last two seasons when Ivory Coast production numbers fell by some 30%. We all saw what happened on the global scale. And that's the same scenario we are seeing play out or being projected for the next season, which starts in October. And the estimation is that the drop could be between 30 to 40% in terms of what Ivory Coast did last season or this season. And in fact, in real terms, Ivory Coast has actually fallen below that 2.4 million metric tons of cocoa it produced in the COVID period, where Ghana was also producing about 1 million metric tons. Both countries since COVID or 2020 have fallen below such a peak. I mean, Ivory Coast, for instance, falling from 2.4 million metric tons down to about an average of 1.7, 1.5 every year. And Ghana still struggling to even produce about 600 metric tons every year. And so per the calculations we have so far, the projection is that the drop could be around 30 to 40%, exactly maybe what we saw last season and last two seasons. And the big factor here is what will it do in terms of the global market and the price of cocoa in the coming season.
I like how you already put out that question. So maybe you just answer it already. What will be the impact of this really looking at globally? And then when you also look at the value chain, the stakeholders within the value chain, how is this going to impact them?
Well, I think for traders, last season was a big template for them. And they'll be using what happened last season to actually, judge what could happen next season. And in fact, if you look at, I think Ivory Coast is just learning from Ghana, where Ghana did forward sales last two seasons and had to default on some of its obligations and had to pay the price. And Ivory Coast will not be the first country to possibly not do forward sales or future sales. Ghana, for instance, is now doing spot markets. And why is this so? It's because there is high premium being placed on Ghanaian cocoa, and there's high risk because of the defaults Ghana actually saw last season. And because of that, if you are doing any form of syndication or syndicated loans or forward sales, you simply would have to pay higher in terms of the coupon rate. It's the same situation Ivory Coast is facing. So Ivory Coast is trying to learn from what Ghana went through in the last two seasons and not repeat the sins of Ghana. On the global scale, the projection is that if both Ivory Coast and Ghana, which combined produce about 60% of the global cocoa beans, are not able to produce above or in the region of their average production in the last two seasons, we could see what happened in last season where cocoa prices went as high as $10,000 per ton, and at a point was even more expensive than copper. And so when this happens, it will definitely affect trading on the global scale, and sweet tooth and those of us who possibly love chocolates will be affected. And so it's not just Ivory Coast combined. I think that there is that sort of a snowballing impact across West Africa, where it started first with Ghana and now Ivory Coast. We simply do not know the trajectory that both Nigeria and maybe Cameroon will follow.
And that's a sad one, better imagined, than experienced. Now, let's look at this. The impact of poor weather conditions cannot be overstated. I mean, it's been stated over and over. But are there measures in place to sort of significantly mitigate the risks and maybe effectively cushion the impact?
Well, unfortunately, both Ivory Coast and Ghana, who produce 60% of the global cocoa beans, we do not have sophisticated equipment and instrument to possibly do weather forecasting and all of that. So that really affects farmers. They have to rely on crude methods and traditional methods and all of that. We've not really seen a lot of investments over the years, but there are programs. Ghana has actually gone through that sustainability program over the years, looking at weather and other, sustainability in terms of the crop that you even plant and all of that. Hasn't really been done. And I think that over the years, the focus really has been what does nature give, compared to our preparation. But I think that because of what happened last season, it has given both countries, especially farmers in both countries, some sort of template to learn from in terms of what to do in such a circumstance. Even the quantum or level of fertilizer application and all of that is very, very important. In such a weather, how do you go about, fertilizer application, spraying and all of that? And so I think that although we've not really seen a lot of investment in that aspect, where international organizations are currently coming in, the farmers are still relying on traditional methods to actually do some of these projections and how to solve some of these bad weather conditions.
I would like to take you up on one of the things you talked about, which is, the dearth of investment or investments not coming in, and then talking about not getting enough international support. Do we always have to wait for international support? Can the government, stakeholders within the value chain rally around, do something to get this sorted? Do we always have to wait for international support and all that?
It's always about capital, right? And so do you have the money to do this, this sort of program you want to do? They are highly capital intensive in terms of the sustainability program. Ghana, for instance, when we did ours, the one Ghana is currently running, it was supported by the World Bank. And in fact, if you look at the amount of money being spent, the cocoa sector rehabilitation program that Ghana actually did, it cost the state a lot, and it was a loan from or support from the World Bank. And so because of the nature of these programs and the capital you need to make it work, you definitely would always have to seek some sort of collaboration and partnership from international organizations. Already, if you look at Ghana and Ivory Coast, for instance, both countries are struggling with their budget, with big budget deficits. And for instance, Ghana was kicked out of the international capital market. And so even if you want to take the lead to possibly go and get loan from the international capital market to come and solve some of this problem, you're already out of that market. And if you still want to go, you pay high coupon rates. Ivory Coast, for instance, is not able to do a lot of the forward sales, which could have brought in more money to do some of these programs. And so you see that capital is the biggest constraint here. And that's why countries would always have to rely on donor support and international, in terms of collaboration. But it's a global system, and if we get support, it's not bad. But sometimes it's also good when, government also take some of this initiative. But usually, we see government taking the initiative. But what has always been the big, constraint has been capital, finding money to fund some of this program, because cocoa is grown in semi-deciduous forest areas and all of that. So accessibility, road infrastructure, so many things go into programs around cocoa. Although when we talk about its price on the global scale, we talk about the $10,000s and $9,000. But in terms of how to even get a 64 kg bag of cocoa for a farmer to sell, it's always difficult because of the terrain we are actually operating. And so I would say that, well, we do initiate some of this. Ghana and Ivory Coast do initiate some of this program, but the big constraint has always been capital, and that's why you always have to rely on international collaboration and possibly partnership.
Right, let's look at the disease now. Whether you want to look at swollen shoot disease or any other one, how big a challenge is this?
It's a big challenge to the extent that in the case of Ghana, which Ghana has been battling with the swollen shoot disease for the past 3 seasons, where under the World Bank supported program and the EU supported program, in terms of market access and all of that, you have to sometimes cut and replace some of these cocoa trees. And if you look at the lifespan of the cocoa tree, it takes a long time before the flowers even start coming for you to even get the cocoa beans. And so in the periods where Ghana fell from the 1 million metric ton, annual production numbers to 500,000 and 600,000, that was a period that Ghana had to do most of the cut and replace. And so if you see Ghana talking about higher production numbers in the coming season, it possibly means that we are almost through with that period. And that's a stage that Ivory Coast is currently, where most of their farmers have to resort to that same method of cutting the trees and replacing them, which sometimes will take a long time before you'll be able to get your production numbers. In the case of Ivory Coast, returning to the average of 2.4 metric tons annually is going to take some time because of the cut and replace module that you actually use in solving some of this soil issue disease.
I like that you've been making reference to other countries, especially within Africa. So, talking outside Ivory Coast now, I'd like you to talk to us about, how these other producing countries deal with these issues, whether it's the weather or disease-related challenges. Now, we might also go, outside Africa, because to a very large extent, you've sort of mentioned what some African countries are doing.
But, if there's any place that both Ghana and Ivory Coast must learn from, it's supposed to be Brazil and Ecuador. Brazil has been battling with the black pod or the soil issue disease for a very long time. And we've seen their production numbers, coming down and as a result of the disease. And so they are almost through with that period. So the key question is, what did they do to actually get out of this, madness? And both Ghana and Ivory Coast are learning. And in the case of Ghana, for instance, there are deliberate efforts to actually use cocoa board as a means to actually help farmers, giving farmers, some of the equipment and means to actually battle some of this soil issue disease. The spraying of cocoa, is government going to take control of this and make it free for cocoa farmers and all of that? The application of fertilizer. All of those things are input costs to the farmer, and how government is stepping in. For instance, in Ghana's case, when the latest farm gate price adjustment was announced, the government announced that it was going to do free fertilizer and then also other free stuff like spraying and all of those things. All of these things are geared towards helping to fight such diseases like soil issue and possibly black pod.
Right, that's interesting. Now, apart from these two challenges that we've highlighted, other issues in the sector include low soil fertility, farm management and infrastructure. Are the African cocoa giants rising up to these challenges? Are they really addressing them? Because I remember earlier you also talked about infrastructure, though maybe not directly, but you talked about moving some of these goods, to the consumers and all of that.
I would say efforts are being made, but in the case of Ghana, for instance, while government is making huge efforts to make cocoa production sustainable, you have a menace called illegal mining, which is, currently replacing cocoa farms, where Ghana is currently Africa's biggest producer of gold, and we're actually trading cocoa for gold. And so you have cocoa farms being, traded as illegal mining sites and all of that. There are instances where you have a cocoa farm on one side and an illegal mining site also on one side. That affects soil fertility and all of that. In the case of Ivory Coast, they are not so much affected by illegal mining, but definitely because of the weather condition, the nature of the terrain in West Africa that helps us to produce cocoa sometimes can also be disadvantageous, in that instance. But I would say that, efforts are being made, but in the case of Ghana, while the government is going ahead to make efforts to make cocoa production sustainable, you also have a menace called illegal mining, which is pulling back production and not really helping in terms of soil fertility. And then the premium cocoa that we possibly used to boast that Ghana had that premium cocoa. And we understand that the EU regulations are in, and if Ghana possibly doesn't go by those EU regulations, we could lose access to the EU market, same as Ivory Coast and all of that. And so both countries have peculiar situations, but I would say that efforts are actually being made.
All right, we know Nigeria, a major cocoa producer also, is shifting its focus towards, higher value processed cocoa products. And we've seen that when you look at Nigeria's non-oil exports, cocoa takes the lion's share. Now, is that the case with, these other African countries? And how much of a solution is this when you know that, there are challenges that might not make you able to, prop up your production or increase your production, and then you begin to do value adds and all of that? Is it something you think these other countries should also emulate, or is it something they're already doing, and how has that been?
Well, Ghana is already, looking at other commodities like gold, where the country has currently introduced a gold board initiative where Ghana wants to take advantage of gold inflows from the small scale sector. If you go to Ivory Coast, the focus is strictly not just on cocoa, but also to focus on coffee. But whilst they are looking at alternatives, the share price of cocoa currently on the global market is a bit, it's making these countries take a bit of, they're not really looking at the real situation where even though you are producing, so if you export less, you are still able to get more. And so until maybe we find cocoa prices coming down for these countries to possibly look at production numbers and how sustainable they can be, alternative will be a big challenge. But Ghana, for instance, is looking at so many other alternatives. Gold is number one, although it's not a crop. But I understand that efforts are also being made to also make rubber, export, which is usually not traditional export, also a key, commodity in Ghana. And in the case of Ivory Coast, you see rubber also a big factor in there, and then also coffee. So there are efforts to actually get on board alternatives so that when possibly cocoa fails, you can fall on other crop commodities.
Interesting, but we hope that it does not fail. All right, Agyei, analyst SBM Intelligence, thank you so much for joining me today on Business Edge. Do enjoy the rest of the day and the weekend.